Folks, while everyone is focused on the coronavirus outbreak in the USA, things in China, well, they're starting to come back to normal. Matter of fact, there's hardly any new cases developing at all. With biz ramping up in China once again, I'm having my eye on one stock that's currently the second strongest stock in the S&P 500, and one that I believe will continue to rise, even if the economic conditions in the US continue to decline. So please take notice. And when I say it's the strongest stock in the S&P 500, I'm talking about my relative strength scan. This is a scan I use daily to find which stocks are outperforming. And I was shocked to find out that this stock, the ticker symbol is JD, the name of the company is JD.com, and it's the Chinese second biggest e-commerce company behind Alibaba. It provides both biz to consumers and biz to biz services. Currently, it's the second strongest stock out of the S&P 500. Imagine that, Chinese stock after all of this mess that they started. JD owns its own logistics and warehouse space, which is much more labor-intensive and financially expensive approach than Alibaba's pay commission and outsource method. However, this approach is paying off right now, since JD is not dependent on third-party delays and avoids large portion of counterfeit goods that plague the Chinese e-commerce industry. Recently, JD signed a deal with Walmart designed to give rural areas grocery delivery in 2 hours or less. Even during the current coronavirus pandemic, the company anticipates year-over-year revenue growth of 11%, which is impressive considering that most companies are not looking at positive growth for at least 2 quarters. So one of the stocks that I'm looking at right now, while everybody's focused on how bad coronavirus is in America, I'm focused on what's going on with China. And savvy US investors and global fund managers know that it's time to turn back the focus on China, and JD may be the one that's coming up in the next couple of months. Talk to you guys soon.